Hi, good afternoon, everybody. While they're trying to get my presentation up, let me do a bit of a preamble. Great to be here in Hong Kong. First time I ever came here was as a fresh-eyed 18-year-old in a gap year in 1994, 23 years ago. So how things change. Pre-handover, I hasten to add. Can we do the old full screen? Awesome. So DLT, distributed ledger technology, blockchain. Everybody's talking about it. What's it all about? I'm going to try between now and lunchtime give you some sense of what's going on. And what's a little bit of what's going on R3. I'm not here necessarily to sell R3, but what I am here to do is kind of give a sense of what the roadmap looks like to this stuff going into production, which is the number one question we get. When is this stuff going to be real? And hopefully I'll give you a sense of that. While we're waiting for my slides, how we doing? Oh, this is looking promising. That is an awful picture. Good Lord. How are we doing? Technical difficulties. So a man walks into a bar. So I'll tell you what I'll do. I'll jump ahead to a slight bit of narrative. This isn't where I would normally start, but you know, one of the questions you'll have is who is this vampire squid called R3? Because everybody sees us as this big bad banking consortium, and it's a big defensive play, and all we're trying to do is make sure that the banks don't get disrupted. And nothing could be further from the truth. Well, firstly, we're not a banking consortium, we're a financial services consortium. You may have heard of our distributed ledger platform, Corda, which I'll talk about in a second. We do build technology, but we're more than that. And the unit that I run, the Lab and Research Center, is a place where that ecosystem, and I'll show you what that ecosystem looks like, is trying to figure out how to get this stuff into production. Less talking and more doing. That's the kind of the theme. There's an awful lot of doing in an awful lot of talking in emerging technology. People love the buzzwords. People love to do, do a lot of startups that at the end of the day statistically fail. We're trying to definitively not be that. And so how did R3 come about? 2014, as is one of the slides I'll show in a second, we see as the year of enlightenment. That's the year that the industry, the people who were forward thinking in general industry, here we go, really figured it out, that this was going to be real. And we've actually come on a journey in the last 3 years that's taking us in a very solid direction, but we're not there yet. But we're getting there. Firstly, what's our mission in R3? And actually, this is the mission, should be the mission of the industry. And clearly, I'm going to be talking with a financial services focus whenever I'm talking about blockchain and DLT. But it has many other applications. But we're at a Fintech conference, and that's what we're going to focus on. So we're here to redefine the foundations of finance. That's a bold statement, right? But let's be clear, that's what's at stake. Decades of technological debt, the way in which we do business, both from a process perspective and from a front office perspective, is going to change. And I don't think there's a global financial institution who doesn't really believe that, at the very least, that's highly probable. But this is the key. This is why R3 exists in the first place, and why you basically see a new consortiums coming up every single week, and we welcome them. It's to harness the power of collaborative networks. And we've all experienced the beginning of that because we're all taking part in the shared economy already. If you've got an Uber or you've ever lived in a B&B, you're right in the thick of it. This notion of a sharing economy, which feels very social to us and very internet focused, is actually about to happen to financial services, but it's more about the collaborative network than the sharing of infrastructure than the kind of Uber and Airbnb that we're used to. And that's a profound shift. To put a little bit more on it, we will revolutionize outdated infrastructures. That's a given. That has to happen. There's lines of COBOL and Fortran in every single bank that some people don't even know what it means anymore. That's true. We've got to move away from 40, 50 years of technological debt and create shared truths. And that's almost the most important part of that whole sentence, the shared truths. What blockchain does is give us the ability to know what the truth is, and I'll talk more about that. So that we can enable anyone to contract seamlessly. So this is all about financial agreements, contracts, everything from a basic lodging of money in a bank account to a derivatives contract to an insurance contract. They're all contracts. They're all based in some legal reality. Everything we do has a legal reality. Remember when we all click I agree and don't read what that is? There's a legal construct behind it, right? The world we live in is governed by contracts. So we need to be able to allow people to contract seamlessly without error. Another bold statement. Can we really reduce errors? We can't reduce user error, but we can reduce and eradicate operational errors for any purpose. It's a big sentence. I just learned about this yesterday, and I'm going to start telling everybody about it starting today. Amaras Law. We tend to overestimate the effect of the technology in the short run and underestimate the effect in the long run. I'm so fascinated by this statement. I need to learn more about why this chap said this. But it could not be more relevant at a time when we are moving through a calendar of events in emerging technology in general, such as the stuff the gentleman before me was talking about, and I'm sure many others, but particularly in DLT. So we're coming out of the year of, if I'm not mistaken, is it we're going into the year of the rooster and we're coming out of the year of something? I forget what we're coming out of. The Chinese calendar, well, there's a DLT calendar and it looks a bit like this. 2014 was the year of enlightenment. Now you could quibble over some of these dates, but I'm just trying to make a point, right? The year of enlightenment, that's when the light bulbs went off in some of the biggest financial services companies in the world. In 2015 was the year of the hype. Let's call a spade a spade. R3 coming together was part of the hype. Blythe Masters going to digital asset holdings was part of the hype. The Economist article called The Trust Machine, front page of The Economist, it's all part of the hype. Some people think the hype cycle's still there. Well, we could argue that, but I think 2015 was the year of the hype. 2016 was the year that we started to produce proof of concepts. Real evidence that this stuff can actually be applied in reality, not just talking. But the proof of concept is dead. 2017 is the year of the pilot. And I'm being very deliberate not to say production. 2018 is most likely the year of production. That's very unusual for someone like me not to say that it's all going to happen this year, right? But it's not all going to happen this year. There's too much to do. But we will get real functional pilots that mirror production processes that demonstrate with real functional requirements and non-functional requirements embedded that this stuff can work. And I don't deny that there might be some instances of some production systems, and I hope there will be. But next year will be the year of production. But make no mistake, this is the fourth industrial revolution, right? The World Economic Forum at Davos is happening now, and they coined the term the fourth industrial revolution, and we believe in it. It's not the computers and the internet and the networking. That's like feeling a little bit 20th century right now. The 21st century will be defined by this confluence of AI and blockchain and biometrics and big data and all the other emerging technologies, 3D printing, right? When it all comes together in a collaborative network, that's when some magic's going to happen, and it's going to look very different than the third industrial revolution. So the roadmap, if we're in the fourth industrial revolution now, let's go down into the technology that I represent, which is DLT. This is the slide that a lot of people believe is the aha moment, because what I'm not going to do is sit here and tell you all about consensus mechanisms and the kind of technological components of DLT, because you don't talk about the internet in terms of TCP/IP, right? There's underlying technology to the internet, but who cares what the underlying technology to the internet, except a few people that need to care. We care about what it did and what it does for us. And the same with DLT. There's an awful lot of focus on the technological components, and the people who need to care about that, they should go and care about that. But most of the people in this room don't need to care about the technology itself. They need to care about what it does. And this is the story of what it's going to do. The analogy with the internet is entirely appropriate. And if you look at, I talked about the world being a place where we contract. We always contract as individuals, as companies, with our banks, with our insurance companies. It's always a contract. And those contracts are involved action, perception, processing, and a communication layer. Now, back in the olden days, pre-internet, this communication layer was faxes and faxes and telephone calls and smoke signals and whatever you needed, snail mail. Flawed. What the internet brought was the democratization of the exchange of data, but what it didn't do, and that's the most important part, and we all know what it did do and how it changed our lives, but what it didn't do was change the way we process information. When you receive the data and I have the data, we still process it the way we want to, which is why in the financial services industry, we spend billions of dollars a year having to reconcile to make sure, is what you think we did the same as what I think we did? Billions and billions of dollars spent every year reconciling that. What a dramatic waste of time and money. The problem is we built the system so you have to do that. What if we were in a position to share processing logic so that we didn't have to worry about the legal contract that was behind it or the terms of it? Because we were looking at the same information and validating throughout the contract that that was the case. What if we had the magic of blockchain, consensus mechanisms, etc., that would allow us to make sure that there's one immutable truth, that we can definitively say that what you think happened is what I think happened. That's what's going to change the world. The implications of what I just said are so profound. Now you can think of yourselves all, and me too, as we're all at the equivalent of 1991, 1992, wondering what the internet's going to do. None of us could have conceived of Uber and Airbnb. So we can't really conceive of where this stuff's going to go. But this is as profound for the financial services industry and beyond as the internet was. Now, The Economist has a lot to answer for. The Economist looked at this from a blockchain perspective. From a Bitcoin blockchain perspective, hence the little Bitcoin there. Now, just to be clear, I have nothing against Bitcoin. There are people who are fervent religious believers that Bitcoin's the answer. Fine, that's fine. We don't talk about or do any work on Bitcoin in R3 because it's a trustless, permissionless exchange of value. It's a system that has no place in a highly regulated system. There's no way in our lifetimes that the regulations will allow for us to use Bitcoin at a grand scale. Take it or leave it. And it's not about trust. To achieve trustless, permissionless exchange of value through Bitcoin, the blockchain is incredible and should win a Nobel Prize. But trust isn't what we need. We need truth, what I said before. So really, it should have been the truth machine. That's what it should have said. And that's the true headline, and that's the true story. Okay, here comes the science. This is as limited as it's going to be on science. These are the key elements of distributed ledger technology. And note, by the way, that all of this stuff was there before Satoshi Nakamoto, whoever he, she, or they are, came up with the Bitcoin blockchain. It's kind of like Henry Ford. He didn't invent the car, nor did he invent mass production. He invented the mass production of the car. Satoshi Nakamoto didn't invent cryptography. It's been there for years. Didn't invent mutability via consensus mechanisms. Or validation. Didn't invent smart contracts. That was Nick Szabo in the 90s. Didn't invent the idea of shared ledgers. But he brought them all together in a way that was truly unique. And to be clear, so everybody's clear, and I'm sure some people know this, but some people don't. Cryptocurrencies operate on blockchains. Blockchains are a subset of distributed ledgers. There's this architecture where you have a series of blocks coming together to immutably store the history of transactions and facts. The one truth I'm talking about is just one way of doing it. Distributed ledgers is the superset. I'll talk about Corda in a minute. We don't have blocks or chains. So blockchain is actually arguably the wrong term. It's probably stuck now, but we don't use the term blockchain. We tend to use distributed ledgers. Okay, you've all seen this slide. This is kind of old news. In 2017, I don't think we should be talking about the cost savings because that's obvious. If what I said is true, we can save a ton of money. McKinsey thinks that we'll save 60 to 80 billion across the 4 use cases in financial services alone: AML, KYC, cross-border payments, repos, and OTC derivatives processes. It's a lot of money. But the bottom statement is the one that really matters. In an epiphany outside a whiskey bar in Sydney a few months ago, I realized I may have come out of the whiskey bar as this epiphany happened. The fallacy of the fast follower philosophy is so relevant in distributed ledger technology. And why is that? Because you could all sit there and say, well, people will go figure it out. Let R3 and the guys go spend their money. Well, yeah, you can wake up in 3 years' time and hope that it's just a vendor choice. I'll switch from my Bloomberg to my Reuters. But that's not how it's going to play out, because this is a paradigm shift. Everything I've just described so far is so wildly different than anything we have right now, and will require re-engineering of processes, retraining of your people. If you wake up 3 years from now, you'll be behind. And I think this fear of missing out maybe has subsided wrongly. Right? Everyone needs to get on board on this one, particularly big financial services company, and it feels like everybody is in their own way, whether they're in R3 or not. Everyone's involved. Now, the World Economic Forum really confirmed our thesis in the middle of last year. We'd already been up and running for a year, and they confirmed that infrastructure replacement, the competing interests, which is really interesting. People always ask us, how do you have all these people in R3 and aren't they all competing against each other? How do they even work together? Well, because competing interests and the legal, regulatory, and governance frameworks, which, ladies and gentlemen, is so important, we don't have the option to pull an Airbnb and pull an Uber and start something in our garage, grow it up to be a $50 billion company, and then get a slap on the wrist from for having done what we've done. In financial services, you will go to jail if you try that. This is a highly regulated industry, so don't try that at home. And this is where we live, right in the middle. And in fact, I'm going to talk a little bit about R3. This is our take, this is our approach on how to solve this. Firstly, ingredient number 1, sign everybody up. So we did good in that, and now we have 100 people, we have 77 members, we have 2,000 people in our members who are engaged with us. We're offices all over the world. You get the idea, we're big and we have a network. Okay, then what do? Well, then you expand your network. So every single box, and I'm going to, just to save time, I'm not going to go through every one of these. Every one of these circles, these are active participants in what we do in R3. The ones I would highlight would be the central banks and the regulators. Yesterday, we had a member conference. I had 100 of our members here in Hong Kong, and we had 4 regulators in the room, some of them presenting back, doing projects with our members. That's how we regulate in parallel. We don't walk up in 3 years' time and say, hey, look what we built. Can we do this? That's not how this is going to work. And we need the obligatory slide of far too many logos. Yes, there's lots of us, and we're doing lots of cool stuff. So what do we do? Well, we are a platform company and a services company. What does that mean? Well, we build the technology with our members, for our members, and Corda, I'll talk about in a second, is now open sourced, so you can all go and download it. But we also provide services, which is what I'm responsible for, the Lab and Research Center, the service of trying to figure out where this goes. Now, Corda is our distributed ledger platform, and I'm not going to go through every one of these boxes. And for those of you that know about Ethereum and Fabric, IBM's Fabric, and other platforms, there are distinct architectural differences in how we've built what we've built versus how everybody's built everything else. We're inspired by blockchain, but we don't have blocks and we don't have chains, so it's not a blockchain. Crucially, we don't have a native cryptocurrency because you don't need one. Some people may argue with me on that, but you don't need a cryptocurrency to have a blockchain. We don't need more currencies. What we need is fiat currency, central bank digital currency represented on a ledger so we can get instant settlement. That's what we really need, and that's some of the stuff we're working towards. So we've built Corda. But this is kind of what we do. The confluence of projects, we have many projects running at any given time, and the vendors, we have all of, I should have mentioned on the previous slide, actually, this slide, the startup community. So we have all of the startups from all over the world, Digital Asset Holdings and Symbiont and Itbit, if you're in the know, Axoni, as well as the Intels and IBMs and Microsofts of the world in our lab doing work. So we've got everybody. And when you've got everybody, you can start to really generate some conclusions, reusable components, momentum and participation, answers to the questions of how long is it going to take to go from proof of concept to prototype to a pilot in 2017. Get permission from your regulator and get this stuff into production and start saving money and making money. That's the only thing that matters, is getting to that end point, not talking about it, actually getting there. And so this is kind of, I'm not going to go through this in detail. I just wanted to show that the roadmap from talking about it to doing it requires participation, collaboration, and thinking. And this is one example of how we think about getting the work that we do out of the talking shop and into production so that people can actually start using it. And crucially, being smart, and this is a very financial services, again, this is a capital markets focused slide, but doing work on the trade life cycle and across different asset classes, it means being smart and not having 10 different startups who all have top of stack applications that satisfy these. We've got to build big picture components that we can share together, and that's what will generate the cost savings. So being smart about how we go through phases and how we extend across the landscape is super important. So I'm going to leave you, ladies and gentlemen, and get out of your way so you can get to lunch with an example that I've used a lot recently, and people like. Because we can talk about banking and capital markets and insurance use cases and trade finance and identity and security and scalability and blah, 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 right? What does this mean for you? What does this mean for me? What does this mean for our kids? What is the Uber thing? Can we envision what the Uber thing is that in 20 years' time or 15 years' time or all going well, 10 years' time? That will be like, wow, we couldn't have never have done that before. Here's an example. You walk into your doctor's office or your dentist's office and you identify yourself biometrically. One of the other emerging technologies, a thumbprint or an iris or some other DNA, or I don't know what it is, stuff we don't even know yet, but you identify yourself so there's no question about who you are. Because of the magic of blockchain, I'm able to access securely, immediately, without delay, and definitively the details of my insurance contract that I might have, what deductible I have, what the coverage elements are, immediately. Didn't have a credit card, didn't need an insurance card, I just had a thumb or an iris. That's come, and the doctor now can immediately see the situation. Didn't need to bring anything. But here's where it gets interesting and we start to spill over into other industries. What about my medical records? I'm from Scotland. My medical records are still in a folder in Glasgow somewhere. I don't know what my medical records are. I'll probably never see them again. I don't even know where they are. In the future, all of our medical records will be up in the blockchain, owned by us, owned by you as individuals, and accessible only to the people that you say they should be accessible to. We'll actually own our identities because of this technology. There's a big backlash in Europe about identity and who knows what. This solves that problem. You can own and control your identity. And by the way, you can get paid for it instead of other people making money out of our identity, LinkedIn. So, or Microsoft, I suppose, these days. Golden Copper, who they're a partner, I should hasten to add. So now, all the information I need is there so that I can get my treatment. And immediately after that, the patient script is released. This is kind of modern, right? We see this stuff now. But the last bit is the magic. Because as I walk out the door, my medical records are updated and have gone back up into the cloud. My insurance company has updated its records immediately. The payment that needed to be made, and there's a series of payments here. Think about it. I've probably got something like a payment that I need to make to the doctor, that the doctor needs to make to a supplier, that the insurance company needs to refund the doctor. See what I mean? Like there's a bunch of payments, and that's a bunch of banks, and that's a bunch of money that had to move around. That's all been done. It's been done instantly, securely, and immutably. One truth. There's no question that that happened. And there's no waiting for something to come through the letterbox. There's no signing of a document. There's no waiting for something to clear. It's literally, as I walk out the door, everything is done. That's where we're going with this stuff. That's what DLT and blockchain will afford us. And if you're a big insurance company or a bank, you should care about this outcome because this is the future. Thank you very much indeed.